This is our video blog for June 8th, 2011, and like most days we really want to buy the strongest of all the currencies against the weakest. And today the yen had a lot of strength. The daily, weekly, monthly trend was up. A little bit of weakness, and then the trend strength resumed. The dollar had strength for most of the day. However, the daily, weekly, monthly trend underneath the real-time histogram on the top was down. So you're better off buying the yen, which is in an uptrend on all time frames. Maybe you would trade that against the weak Australian here at 2 o'clock, which is down on all time frames, and it pretty much stayed weak until about 7. So let's look at that. From 11 to 2, the yen had weakness. So and this one actually had strength. So at 2 o'clock, when this one started to get weak and the yen was strong, you'd be looking to sell the Australian dollar. And you can see last night it had a nice drop off. More than likely this was a Fibonacci retracement of that wave, which it was, 38% retracement right there. This also gives you your Fibonacci profit targets down here. There's a weekly pivot lit there, and right above there's a monthly pivot. There's the previous day's low right there, and the hourly moving average. So it's not likely to go above this level right here. This is your maximum, likely continuation area. It might go a few pips above there, but this is an area where we had some counter trend signals. It's very likely to continue its trend, and it does. You can see right here at 2 o'clock, you get into that trade and it goes all the way down to 84.50. If you're a longer term trader, you just made 100 pips. If you're a shorter term scalper, you might have got into this trade right here, came down and started to go back up. You get out of there with a small loss. You go short right here, you have a small win, and the third trade is the one that just goes nice and smoothly right down here to the lows. And if you took this trade here, probably most of us would have got out here. Usually the lower containment band is the end of the move, and there's basically two entries that we take: sideways consolidation entries and pullback trades. This is a pullback trade. This is more of a sideways range. Minimum time frame is 30 minutes. This is a pullback trade, and again at the low is a sideways. Any sideways movement at the lows for an hour and a half, 2 hours, very high probability trade. You want to draw your fibs on this last wave if you're a short-term scalper, and these are very high probability areas to get out of that trade. If you had shorted this last one here, 84 out at 56, you made a little over 20 pips. If you shorted this one right here at 33, and then it came down to the lower containment band, and the weakness kind of subsided a little bit, you made 60 pips on that trade. So some small win, huge win, huge win, and that's basically, you never know how much you're going to make on any given trade, but you do know what your risk is. The stop should be right outside of the previous swing high and low by 2 or 3 pips. If it's a more volatile currency like the Australian yen, you might put it 5 pips out and trade smaller lots. Let's look at the euro dollar today. Most of the time it was strong until about 6, and the CAD was weak and the Australian were weak. So you could have also bought the euro CAD, and you can see a little pullback trade right here. Pullback trade here didn't work. This pullback trade worked. This pullback trade worked. And you can see it made a higher high with less strength. That's usually a reversal signal. And you might have tried buying the hourly here, which failed. Once a currency goes from above to below the hourly, oftentimes the trend is down. If you wanted to look to try to buy the bottom, because this one has a weekly and monthly trend, usually at and underneath the white containment band you can. It's only up about 10-12 pips from there. But usually if the longer term trend is super strong, you can look to buy at and especially 20-30 pips underneath the lower containment band. Let's look at the euro Australian. Now, euro wasn't the strongest currency today, but you can see this is above the hourly, more likely to go up. This one had both a pullback and a sideways range, and you might have bought it right here with your stop underneath the lows down here, and it took it a while to break out. If you got spooked in this and got out with a small loss, when it breaks out again, you get back in, and you can see it went from 51 all the way up about 50 pips. Usually they stop at fib targets off the last wave, so if you drew this on there, guess what? It's above the upper containment band. It's not excessively strong because it's not at or above the white line, and that's the end of the move. And if you wanted to short the double top when it ran out of steam up there, it's a pretty decent trade. The euro was only strong for a brief amount of time today. Later in the day, it wasn't. You can see it pretty much got weak at 6. So from 6 on, you could be looking to buy the euro, or I'm sorry, sell the euro yen. Look at 6 on. Here's 6 o'clock right here. This one's underneath the hourly. It came up to my Fibonacci area, ran out of steam. If you wanted to sell the breakdown here, the little pullback here sideways, you're short, out here, short here, small loss, short here, very nice win. And again, the Fibonacci profit target levels are excellent places to take profit. If it shoots through the first one, or it approaches the first one with incredible weakness, it usually goes to the second fib target. Don't get greedy when you're at or underneath the lower 1.618. Most of the time, probably 70-80% of the time, that's your maximum profit. Get out. And this trade right here is pretty decent too, because it comes up to a resistance area, the previous day's low, weekly pivot, there's likely to be selling there, and you can see the strength on the way up is nothing compared to the weakness on the way down. Very high probability trade. Now the dollar is relatively strong today too. It doesn't have the weekly and monthly trend of the yen, nor does it have the intensity the yen had today. But you could have also sold the euro dollar too. Notice this one's underneath the hourly, and I also predicted yesterday that the euro dollar stopped down, likely to go down. It really took it a long time to start to fall, but once it broke underneath the hourly today, and a couple days ago you had a trend reversal signal that was usually the end of the move, and it took it literally almost a day before it started an intermediate term downtrend. But knowing that the longer term trend is up, you might have shorted here, probably small loss, shorted here, support level, weekly high, likely to be some buying there, and there was. Small 20 pip profit, you might have gone short here, break even, short here, and this time down, it broke it. Notice this bar right here, a lot of weakness. It's likely to break the support that it touched 2 times before, and the 3rd time is likely to get broken. If you wanted to short this little counter trend move right here, comes down and loses some of its weakness, you're out with a small 10-20 pip profit. Goes short here, small profit, short here, nice profit. You keep moving your trailing stop down. Let me showcase our new FX IntelliTrend stop, which I'm going to release soon. This is excellent for helping you stay into trades. Again, if you shorted right here, got you out right here. You shorted right here, it kept you in with a small profit. You shorted here, you had a loss. You shorted again, you got out of the trade right here at 90. You would have been short somewhere up here at 22, so that's a 32 pip profit. This tends to find and keep you into nice strong trends. If you want to sell but you're not sure when to do it, you can always use this tool for entry and exit. Small profit in here, very nice win. In here, small win. In here, loss. In here, 32 pip profit. So that's going to be released soon, and it's an enhancement over a regular Chandler stop because it uses our best trend tool, which is the IntelliTrend Fast. This tool is made up of 4 of our other statistical trend tools: FX Momentum Pro, FX Tipping Point, FX Power Index, which is an old tool but very good, and FX Trend Candles, which use the Heiken Ashi candles on all the different currencies that make up the euro dollar. Every euro pair, every dollar pair, and it measures the percentage of the Heiken Ashi candles that are trending up and down. So this is a very comprehensive tool. In the trailing stop is one of the most sophisticated exits you'll probably find. I'm not done with it yet. I'm planning on putting extra rules in there that will get out of trades that go beyond the 4-hour statistical high-low. It's going to tighten the stop even more. Now, on the way down here today, it never went beyond these 4-hour statistical highs and lows, but if it did, I'm going to tighten the stop in half because, almost always the market reverses when it hits or goes underneath these levels. So there's no reason to, not lock in another 6 or 8 pip profit on those situations.